Hello, and welcome to Trade Talks. I'm your host Andrew, and on this show we are here to talk about all things markets and the ways that you can use what you learn on this show to improve your trading outcomes and ultimately your trading results. Today I'm excited to discuss with you the Philadelphia Semiconductor Index, also known as or referred to as the SOX. This is one of the most widely tracked sector indexes out there, and for several reasons, including its relation to the technology sector, the Nasdaq, and particularly its sensitivity to the interest rate discussion. Starting with the basics, this index was launched just over 30 years ago in December of 1993, which is incredible to think that we have an index with such a long track record and with such a strong performance. And these are really two of the best selling points of this index versus other competitors' products. In terms of methodology, it's pretty straightforward. The ICB subsector classifications is used to pull out the semiconductor subsector companies as well as the production equipment companies that provide the semiconductor designers and manufacturers with the equipment and resources required to deliver their products. For clarity, ICB stands for Industry Classification Benchmark and is a global classification system used to categorize companies and securities into industry sectors and subsectors. The ICB classification system was developed by the FTSE Russell, which is a leading provider of financial market indexes and is widely used by investors, analysts, and financial institutions for organizing and analyzing data on companies and markets. These ICB subsector classifications are a detailed breakdown of the industries within broader sectors. For example, within the technology sector, there are subsectors such as software, hardware, semiconductors, and telecommunication equipment. These subsectors allow for more granular analysis of companies within each of the specific industries, helping investors identify trends, compare companies, and construct diversified portfolios. In context of the SOX, the ICB subsector classification are used to select semiconductor subsector companies for the inclusion in the Philadelphia Semiconductor Sector Index. In terms of index weighting, a modified market cap weighting approach is used in which the top 5 constituents of the index each have a weighting capped at 8%, and the rest of the constituents in the index are capped at 4%. We are always looking for the top 30 names, so the 30 largest semiconductor companies with a US listing by market cap. This does allow international companies to make the index, even though it is a US listed index. Some international semiconductor companies with secondary listings on the Nasdaq or the New York Stock Exchange do make this index. In terms of the top 10 companies, we have companies like Nvidia, Intel, and AMD in the top 5, and names like Texas Instruments, KLA, and Analog Devices in the preceding 5. These 10 companies make up approximately 60% of the total index weight, and this weighting is not going to change very much given that the top 5 have an 8% allocation to the index and the rest of the index is capped at 4%. So we'll always have a high concentration here around 60% level of the total index weighting going to these top 10 companies. There are a couple of other semiconductor benchmarks. One that VanEck supports is the MVIS US listed Semiconductor 25 Index, where essentially the modified market cap weighted index tracks the performance of the 25 largest, most liquid US listed companies that derive at least 50% of their revenues from semiconductors. This is a pure play index and contains only companies which are engaged primarily in the production of semiconductors and semiconductor equipment. There is also the ICE or ICE Semiconductor Index from the parent company of the New York Stock Exchange. This is an index that underlies the BlackRock semiconductor product. The thing here is that there is really not that many differentiating factors when talking about US semiconductor indexes. However, one of the differentiators is the weighting applied to the Taiwan Semi, which is based in Taiwan and it has a secondary listing in the United States. Growing optimism about the prospects of the Fed's interest rate cut in June has led to a stock market rally. In fact, the semiconductor sector has outperformed, with the SOX reaching a record high, gaining 23.7% this year. The Federal Reserve Chair, Jerome Powell, told a US Senate committee that the central bank is not far from being confident that inflation is declining towards the 2% target, which would make rate cuts possible. The comment has bolstered investors' expectations for the first rate cut in June, leading to strong risk-on trade. Traders now see a 72.7% chance of the first rate cut in June per the CME Group's FedWatch tool. SOX is closely watched by investors, analysts, and economists as it reflects trends and sentiments in the semiconductor industry, which is crucial for various sectors including technology, telecommunications, and consumer electronics. Volatility within the semiconductor index is a critical aspect to comprehend for investors navigating the semiconductor market. The SOX, like any index, can exhibit notable fluctuations in its value influenced by various factors inherent to the semiconductor industry and broader economic conditions. Investors should be aware of the technological advancements, which are a cornerstone of the semiconductor sector, that can drive significant volatility with rapid shifts in technology such as the emergence of new chips or breakthrough innovations like AI. These can swiftly impact the performance of semiconductor companies, thereby affecting the overall index. Moreover, macroeconomic conditions play a pivotal role in shaping the volatility within the SOX. Factors like global economic growth, interest rates, and inflation can all influence investor sentiment towards semiconductor stocks, leading to fluctuations in the index. Trade policies also contribute to the volatility within the SOX. Tariffs, trade tensions, and geopolitical developments can disrupt supply chains and impact the profitability of semiconductor companies, thus causing fluctuations in the index. Supply chain disruptions, whether due to natural disasters, geopolitical tensions, or logistical challenges, can also introduce volatility into the semiconductor market, affecting the overall performance of the SOX. In summary, understanding volatility within the semiconductor index requires consideration of various factors including technological advancements, macroeconomic conditions, trade policies, and supply chain disruptions. By recognizing these dynamics, investors can better navigate the semiconductor market and make more informed investment decisions. In context of what we've seen the SOX index deliver over the last decade or so is nothing short of extraordinary. With returns even better than the Nasdaq 100, you look at what these top 10 names, for example, have done in the past 1 or 2 calendar years, and a lot of them have put even double-digit returns or even doubled in price. Looking at names like Nvidia that was up over 100% for the past 2 years, and a lot of other names that are having healthy double-digit returns. Intel was the only one of the bunch that has really been weak for the last 2 years, unable to return to its previous highs, which has really been driven by a strong fundamental backdrop in terms of pricing power for their products and in terms of supply chain weaknesses that have led to longer and longer delays for these products to reach end users. Similar impacts have been seen on smartphone manufacturers, gaming system manufacturers, and auto manufacturers, which is setting up this competitive environment where no one wants to wait very long for the final product, and a lot of these companies are having to extend their time horizons, where they are now entering into a name your price type situation if they want to cut to the front of the supply line. Ultimately, the end user is going to have to pay up, and this is one of the reasons this index may be more protected from inflationary pressures going forward. The Philadelphia Semiconductor Index serves as a leading indicator for market shifts and sentiment. Changes in the SOX often reflect broader trends in technology and the global economy, offering valuable insights for investors. In today's dynamic investment landscape, understanding the tools at your disposal is crucial for making informed investing decisions. As outlined in this presentation, the SOX tracks the performance of semiconductor companies, offering valuable insights for investors in the tech sector and beyond. So how can investors leverage the SOX as an investment tool? Firstly, it can be used as a market sentiment gauge, where it serves as a barometer for the market sentiment towards the semiconductor industry. Upward trends signal positive sentiment and growth potential, while downward trends may indicate challenges or negative sentiment. Secondly, performance comparisons. investors can compare their semiconductor-related investments to the SOX. Outperformance relative to the index suggests strength, while underperformance may signal weakness. Thirdly, industry trend analysis. Analyzing the components of the SOX provides insights into the industry trends and dynamics. This helps investors identify emerging opportunities or potential risks within the sector and tech stocks in general. Fourthly, as a risk management tool, monitoring the SOX alerts investors to industry vulnerabilities, enabling adjustments to their portfolios to mitigate risk. And finally, macroeconomic insights. The SOX reflects broader macroeconomic trends, offering insights into the health of the tech sector and the overall economy. Understanding these trends can really assist in long-term investment planning. In summary, the Philadelphia Semiconductor Index is not just a number on a screen. It's a powerful investment tool that savvy investors can use to help navigate the ever-changing landscape of markets and make better overall informed investment decisions. Thank you all for joining me today for this insightful Trade Talks presentation. We've delved into the intricate world of semiconductor investments and explored how the SOX index can be a valuable tool for investors. As we conclude, remember that the SOX is more than just a number. It's a window into the pulse of the semiconductor industry. Whether you're a seasoned investor, a seasoned trader, or just starting out, understanding these trends and dynamics of the semiconductor market can make a world of difference on your investment journey. Thank you once again for your time and attention. Let's harness the power of knowledge and data as we navigate these markets with confidence. I appreciate you and thank you for joining me on this episode of Trade Talks. Please like and subscribe if you haven't already. Until next time, I'm your host Andrew. Happy investing. Let's go.